Hello, everyone. Welcome back to the Market Chat. My name is Richard, and joining me today is Justin Smyth, also known as @TheNextBigTrade on Twitter. And today we're going to be talking about stage analysis. I'm really excited to have him on because I haven't really talked to another trader who uses that as his kind of primary method and strategy. So really looking forward to this one. It should be a great conversation. Justin, thanks so much for coming on and welcome to the show.
Richard, thanks for having me. I've been watching your Market Chat for a while now. I think you're doing an awesome job. You've had a lot of great guests, so I hope I live up to the expectations you've set, and I'm really excited to talk about stage analysis with your audience today.
For sure, and we're glad to have you on. To start things off, why don't you talk a little bit about kind of your journey, how many years you've been trading, and how you kind of evolved to your current style and learned stage analysis?
Yeah, so I actually got, like, my very earliest start was in high school. I just got interested in learning about the stock market at a pretty early age, and I started reading the financial pages in the newspaper. This is like in the late 1990s. And all I did then really was just get some money and put it into some mutual funds and some tech stocks. And I went off to college and I didn't know what I was doing. I basically rode the tech bubble up, then I rode it back down and lost a lot of money. But I was still interested at that point. I got a degree in computer engineering in college. And then I started working as a software engineer after college. And this is like in the early 2000s. And I wouldn't say until about 2005 is when I really started reading trading books and getting like serious about learning how to trade. So I just kept like ordering books online, and like I had no mentors. I didn't really know anybody that was as interested in the stock market as I was. So I was basically learning on my own, and I just kept ordering book after book, and I started trading the markets with my own money. And like in the mid 2000s, like the commodity like super cycle was around, and like I was reading a lot of websites that were talking about that. And I had like a little bit of success early, like trading stocks in that sector. But then I got into like trading options a little bit in 2008. And I ended up leveraging myself up too much before that. The market crashed and I lost a lot of money then. So that was like my first experience of losing a lot of money in the markets. And unfortunately, I read Stan Weinstein's book like that year in 2008, like
right after the crash.
Yeah. Like just the timing was too bad to really take that information and try to use it. But I regrouped like my psyche and like, got my confidence back. And even though I lost a lot of money, and like, I decided to start trading again in 2009. And I actually started using Stan Weinstein's strategy a little bit in 2009 and 10. I actually made all my money back, but then I got overconfident again going into 2011. And like the market was like in this sideways trading range the entire year. And like the European debt crisis was around that year. And there's a lot of bearishness in the media and stuff. And I was like listening to all this stuff. And like when the market rolled over in like the summer or fall of that year, like I was like shorting it heavily and like thinking it was going to break down into stage 4. And I had like, I had all this previous experience of seeing these huge directional moves in the market the last couple of years. So I just thought naturally it's going to happen again. And it didn't, and I lost a lot of money again. So like it was really an experience where like I had a kind of the start of a strategy, but I still wasn't like accepting the fact that the market was proving me wrong and I wasn't listening to the market. So another lesson for me. And then like it just took a couple more years even after that to kind of finally realize like all these things like I was doing wrong. Like I didn't have good risk management. I wasn't, even though I was starting to use stage analysis more and more, I wasn't following the rules all the time. I was still listening to people that like didn't know what they were talking about. I was like watching TV and stuff. And like, I was trading the market, over trading. Like I wasn't getting out of markets that were bad. So I had all these bad habits, and it just took like losing money like a couple of times to just like figure this stuff out. And then like in 2016, I kind of like just went all in on stage analysis. And I said, like, this is going to be my process. Like, I'm going to like read this book a million times until I figure this out. And, my discipline got better. I started following the system a lot better. And I had a triple digit year in 2016. And then I've been compounding ever since then up until last year. So it's been 5 straight years of compounding for me. So I feel like I've turned the corner, but I'm still learning, even this year. But like from there, then until now, I'm so much better trader. It's just really, a lot of change there. But like, yeah, so it's been a long journey for me. And, a lot of independent learning, but fortunately I've gotten to a place where I'm doing better in the markets now. So
for sure. And those kind of directionless, like choppy markets, those seem to be the tough. And we've seen a little bit of that this year, where people are over trading, trying things and not really listening to the market feedback and still pushing hard. And a lot of people, I think, have gotten chopped up and given back a significant portion of their 2020 gains. So with stage analysis and other technical analysis techniques, we can often get out of those 2008, 2009 crashes, but it's kind of those choppy markets that are worse off for us. Could you talk a little bit about who Stan Weinstein is in general, and kind of what the main principles of the book are?
Yeah, so let me share the screen here, and we can
Go for it.
dive into the system. But yeah, Stan Weinstein wrote this book, Secrets for Profiting in Bull and Bear Markets, in the late 1980s. And when I was reading all these books about the market, you can make the stock market as complicated as you want, or you can, I came across this book and it was just so simple and elegant that it was just amazing. And I'm an engineer, and sometimes the best solution is the simple solution. So actually Stan Weinstein too, he actually got a degree, I think, in economics, when he was in college, but he even tried to use fundamentals to trade, and it didn't work for him. So he developed a system after he had not done well in the market. So so he wrote this book, and he's offered a professional service, I think, for a long time too. But so basically the idea of this system is that he breaks the market down into 4 stages, and any stock is in one of these 4 stages at all times. And the stages, all stocks go through all these 4 stages over time. So the initial phase is the stage 1 base, where the supply and demand is in equilibrium, the buyers and sellers, and eventually a market, somewhere the buyers overwhelm the sellers, and institutions might be coming into the stock, and it pushes it up into a stage 2 uptrend. And that's called a bull market as well. And then eventually the stage 2 uptrend, all stage 2 uptrends end at some point. Yeah. And the buying and selling goes back into equilibrium. And then you have a stage 3 top. And then from stage 3, sometimes the market will just consolidate for a while and it'll break back out into stage 2, or you can roll over into a bear market and go into stage 4. So Stan Weinstein uses a 30-week moving average to define the trend, and the weekly price is really what he used in the book for the price action. So to me, it's just a simple framework to understand what's going on in the market. And then he gives you simple rules to follow when you look at these different stages. So the ideal buy point is when a stock is coming out of a stage 1 base into stage 2, and that's early in the uptrend. And then another, the most important rule in stage analysis is to avoid all stocks that are in stage 4, because this is where you're going to lose most of your money, is riding something in a downtrend. Right. And there's also rules he talks about, stage 3, when a market makes a top, usually there's euphoria about the market because it's just had a huge run, but in reality, the buying and selling has gone into equilibrium, and the market's actually about to top out. So the psychology is a lot different than what's actually going on. And that's where, actually I have this chart here, where I think one of the most powerful parts of stage analysis is how it works completely against the psychology of what happens to people in the market. Because what happens after a long stage 2 uptrend is people get super excited about the market, and they almost if they're in the market, they're so convinced it's the next best thing that they can't get out of it. And if they're not in it, they're jealous of everyone that is in, and they just buy at the end of the bull trend because they can't stand not being in. So that's where you get all this euphoria and chasing in a market, and at the top, and then these people are trapped because they believe in the market, but in reality, it's about to top out and roll over into stage 4. And then they go through these, emotions of anxiety, denial, and ride the trend down, and then finally panic out and sell at the bottom. And then once the market bottoms out for a while and breaks out again, there's no euphoria at all in the market, but this is actually the best time to buy, is when it's done going down and about to break out again. So the psychology is the exact inverse of what you're really supposed to do in the market. So I think stage analysis gives you the rules that counteract what your brain would do if you didn't have this rule set to follow the market. So that's why I think it's really powerful from a psychological perspective.
And can I jump in with a question here?
Sure.
So for the people who aren't familiar with how to differentiate between the different stages, basically, how do you do it? How do you determine whether a stock's in a stage 2 versus a stage 4?
Well, it's just the price action in relation to the moving average. So in stage 1, the price action you can see here is going up and down around a flattening moving average. Then once it breaks out above the moving average and the moving average starts sloping up, then you have a stage 2 uptrend. And then again, like the stage 3 top, the price action starts going up and down around the flattening moving average. And then finally into stage 4, it breaks down below the declining moving average. So it's like the price action in relation to the moving average.
For sure. And it's interesting because the class I took at the University of Maryland, this was one of the first concepts that my professor taught us, which I'm very grateful for. Always focus on stocks in the stage 2 uptrend. That's when the big moves are created. And likewise, on the flip side, the stage 4 declines, those are when the big losses happen. And if you go back and study all the previous greatest winners of all time, you can see that they have significant runs during stage 2 when they're above a rising 30-week. And then all of them pretty much do experience a stage 4 decline at some point. We saw, even looking back at Amazon, Apple, they all had stage 4s where if you know the system and know the longer term trend, you can protect yourself during those downside progress and basically get back in once we have another stage 2 uptrend starting. So I think it's a really powerful concept. And I think you can use it whatever your time frame is. If you're an investor, I think you'll go into later on the kind of buy points for different investors versus traders. But traders in general, you want to be focusing on stage 2 uptrends. That's when the big moves are created. And stage 3 is when there's a lot of chop back and forth. And investors, you want to get in as close to that stage 2, the beginning of the stage 2 uptrend as you can.
Exactly. Yeah. Like actually, I posted this chart I made on Twitter the other day where like people ask me all the time, like, a stock's in stage 2, do I just buy it? Like, no, that you don't just buy any random stock in stage 2. Like Stan Weinstein laid out the ideal buy point, like early in the stage, like the breakout out of stage 1 into stage 2, and gave you like certain criteria, like that should be there as well. Like volume, like no resistance, like, is it in a leading sector? Like those factors are extremely important into catching like the best stocks that are breaking out in the market. And you need to buy them right as they're breaking out into stage 2. Like that's why he calls it the ideal buy point. So, and then you don't want to be buying in stage 3, obviously, because you could be trapping yourself in a top, obviously not stage 4. And then like some people say, can I just buy in stage 1? Well, the problem with stage 1 is you could be waiting for a long time before it breaks out into stage 2. I mean, there's like certain sectors have taken years to bottom out in after a bear market before they go back up into stage 2. So you don't want to buy anything in stage 1 either.
For sure. And this is very similar to Can Slim. We want to be focused on the first and second stage basis. So I know it's kind of confusing stages and with stage analysis and stages with Can Slim, but basically a stage 1 or 2 bases are the first 2 proper consolidations that a stock moves out from. And those occur in the stage 2 uptrend for sure.
Yeah, I've heard you mention those stages about Can Slim. Like it is a little bit confusing, but the stages are numbered in stage analysis, and that's what they are in this system, I guess.
For sure. And do you only use a weekly chart to determine the stages, or do you use kind of a 150-day, 200-day on daily chart?
Yeah, when I'm on the daily time frame, I'll change it to a 150-day moving average on my chart. So that's exactly what I do.
So getting into it, I guess this graphic here shows the ideal buy point for the investor. It looks like it's just coming out of the stage 1 into a stage 2. Can you talk about kind of this graphic and how investors should be interpreting the price action as well as the volume?
Yeah. So what this chart is showing is, the breakout out of the stage 1 base into stage 2. You can see how the price action is starting to get above the resistance line here, which is what I draw exactly on my chart. And then you see the 30-week moving average starting to curl up, signifying it's like starting to move into an uptrend. Notice the increase in volume here. This is a key aspect of a stage 2 breakout. Like Stan Weinstein says, don't trust any stage 2 breakout that doesn't have like a huge increase in volume, because that's a sign that institutions are coming into the stock and are about ready to push the stock higher into an uptrend. And then he lays out the criteria, like how do you buy this stock that's breaking out into stage 2? So what you do is you buy like the initial breakout, which is the point A here. and then you try to buy the pullback, like point B here to like round out your position. So I use this system for position trading. So I'm trying to like establish my position during this breakout point and then this pullback. And then once, if I can get into my position and the stock keeps moving higher, it kind of breaks free and gets this like release velocity and starts moving higher. Like that's how I basically set up my position trade. So that's how this works. And there's other like important factors on the ideal buy point. Like you want a stock that has no resistance. Yep. Like the bigger the stage one base, the better, because that like signifies that there's probably stronger hands in the stock by the time it got to that point, and there's not going to be as many sellers when it breaks out. And the sector is hugely important. Like if you find a stock in a sector that's really breaking out, where there's a lot of stocks in the same sector moving higher, like that's can really dramatically improve your returns if you find that. So these are all important factors for the ideal buy point.
So in terms of the resistance above, like basically what you're saying is if you look to the left on the chart, there is a decline here. You want to see that to be as small as little as possible. You want the stock to be closer to all-time highs and maybe not much volume on that selling. Is that where you're getting at?
Yeah, and actually it's interesting how he put the resistance here in the chart, because he says in the book, like the less resistance, the better. So I use 2 years on my chart to determine if the stock has resistance. I know some people will go back further in time to consider like where the resistance really is, but
yeah,
like, and I think he says that in the book too, like 2 years is what we consider resistance. So if you've got a 2-year chart and there's no price action above the breakout price, then there's really no resistance in the stock. That's how I look at it.
For sure. And it's interesting what you said about the longer the stage one, because I was doing a video with Ross Haber for the Trailline channel, and we were looking at Qualcomm, and it had like a very long, just sideways move for I think 8 months to a year. And when it broke through that finally and started a stage 2 uptrend, that's when it really got going. And that was a really impressive run with Qualcomm. So I completely agree with the longer term base, the more powerful the potential move from it.
Yeah, I mean, here's a Tesla in 2019 broke out of like a 6-year base. Like it was incredible. Like that breakout, like that's a great example of a long base that seems like it's never going to end. So
for sure. So this is the ideal buy point for investors. How should traders use this strategy?
So yeah, he talks about, and like in his terminology, investor versus trader. Investor just means a little bit longer of a time frame, like up to like a year. You might be trying to hold, whereas a trader, you'd be like looking for like a few weeks to a few month move. But in reality, you can use either like I use both of these patterns to look for my breakouts, but this is a breakout within an existing stage 2 uptrend where the stock is previously in an uptrend here in the price action, and the price action starts going sideways and consolidating. A lot of times you want to see like really tight action once you get down to like the moving average here. Then all of a sudden it breaks out again, signifying like they call it a stage 2 continuation breakout. It's continuing into stage 2 and going to continue its uptrend. We can notice the increase in volume here. So all the factors of a investor breakout apply here as well, like no resistance, sector, stuff like that. But this is just a stock that's in an existing uptrend. Typically, I like to buy like the first stage 2 continuation breakout in a stock. Like if you get the further you get along, like, and this would be like the stage bases in CanSim, like they're more prone to failure, right? So yeah, the first
more
continuation,
obvious.
Exactly, yeah. So the first continuation is a good place to buy as well.
Yeah, for sure. So and like you said, I as well look for volatility contraction along the base. You want to see the volume dry up in the right spots and then explosive volume of that breakout as much as you can. So yeah, this is pretty much exactly what I look for: stage 2 uptrend and then a shorter term base within that stage 2 uptrend. Yeah, for sure. Yep. So once you're in a trade, either from that investor buy point or from the trading buy point, how do you go ahead and manage the trade? I think reading the books, he uses different longer term moving averages to kind of slowly stop himself out. But how do you do it specifically?
That's actually an interesting question, because I do it a little bit differently. But he's showing here like the breakout into stage 2, and Stan Weinstein talks about setting a buy point, actually, like a buy order, especially like if you're working and not trading full time, where like once it breaks above the resistance line, like that's where you would buy. What I actually do is I kind of wait until a stock breaks out on volume and just like let the stock show me that it's really ready to break out. Then I'll try to like buy into the breakout, and then I try to finish off my position like on the pullback if we get one. and then I set my stop at this resistance line actually, because what I've noticed is that the most powerful breakouts like rarely go back and go below that resistance line. So this gives me more room to kind of get a bigger position too, because my stop is a little bit closer to my buy point.
Right.
Stan Weinstein actually recommended using like the bottom end of the range to set your initial stop when you're buying the breakout. So I do it a little bit differently, but in reality, it probably doesn't matter. Like, and what happens is when the stock has the first pullback and then moves into like the next part of the uptrend, that's when you start raising your stop and you use the 30-week moving average to trail your stop. So the moving average acts as like a stop loss for you.
Yeah.
Like Stan Weinstein also doesn't really talk about selling into strength much in the book. And I do that a lot more in my own trading. Like I'll start taking profits around like 20% up in a stock. And then he does talk about when a stock moves into stage 3, like you can sell like up to 50% if you don't want to try to hold it through stage 3 and see if it breaks out again. But yeah, like it's just a combination of selling into strength and using this trailing stop. The trailing stop is what allows you to capture like the big move and really get the big gain. So I think if you do a combination of both, like that's what I do essentially, is I want to like get some profits into strength and then ride the rest for like the move. So
for sure. And once you've got a position, are you mostly looking at a weekly chart, daily chart, and yeah, tell me a little bit about that, because I find the weekly chart kind of calms everything down a little bit. It gets rid of that noise, and yeah, kind of stops you from doing anything stupid just because of a big move down, but there wasn't much volume. Then it recovers at the end of the day, pretty much, or the end of the week.
I track all my positions on a weekly chart, but I also look at daily charts. Like I look at daily charts more for relative strength, for things like looking at gaps or looking at like reversals and stuff. Like so.
Yeah.
And it's a lot easier to see like the daily price action on a daily chart. Like the weekly charts are kind of boring, like when you're during the week. But yeah, I totally agree for like risk management purposes and like just like not getting freaked out about the volatility. Like the weekly chart is much better for that because it just shows the trend and it's a lot slower, and it allows you to like not think about the daily moves can be so crazy that they can like do weird things to your head if you're watching it too much.
For sure. And do you only buy on that first breakout, or if there's kind of a consolidation right before the actual breakout, do you try to maybe buy a half position and then add on the true breakout that you're looking for?
You know, if there's like a pocket, like pivot, like it's still kind of like in like a little bit of a base, like I'll buy down there if there's like a lot of volume and before it finally breaks above like the highest like resistance level. I don't try to guess if there's going to be a breakout or not. So I have to see some volume and it has to move above some kind of resistance level for me to want to buy.
Right.
But yeah, that's basically what I do. So there's got to be like volume is super critical to me. Like I will not buy anything that doesn't show an increase in volume as it's moving above a resistance line. So that's
yeah, for sure. And kind of how much volume are you looking for? And are you using like kind of volume rate change things intraday to kind of determine whether that volume is going to come in later, or are you waiting until the end of the day to put in your orders?
I do both. I look at like I go on thinviz.com and check like the relative volume like during the day, and you can spot volume increases a lot earlier that way. Also, I'll just be tracking like, if it has a big daily volume surge, that it's likely to have like a big weekly volume surge. So kind of like early in the week, if it's happening, that it's probably going to be carry on for the rest of the week. But I look at it in the chart too. I just look at the volume bar and compare it to like the moving average of the volume and see like where it's at as well. So I look at all those different things, but yeah, you have to see some kind of volume somewhere to want to buy the stock.
For sure. And how many setups are there from that kind of first 30-week, the start of the stage 2? Because it seems like if the market's been running, there's not a lot of stocks that are actually setting up like that. And if they are, they might be kind of laggards. So how do you think about that? And what do you do if there's kind of no setups appearing at all and everything is kind of in stage 3? Like probably around now, a lot of stuff is in stage 3 or just starting to move up. And maybe it's a stage 2 continuation, but we're not sure.
Yeah, like when a bull market runs for a while, like you're going to run out of investor stage 2 breakouts, obviously. Yeah. So you'll be buying more continuation breakouts like later and later, and then stocks start topping out and moving into stage 3, and you don't want to touch those. The one thing that comes out though is IPOs will come out like periodically during the year, and they'll break out into stage 2, and those can be your early stage 1 base breakouts. There's actually a couple that are happening right now.
Yeah.
And so those can be the early stage 2 breakouts that you're looking for. You can have like laggard sectors that start breaking out that follow the rest of the market. Sometimes those work out well, sometimes they don't. So it's kind of a mix, but yeah, you are overall, you're going to run out of early stage 2 breakouts later on in a bull market.
Yeah. To me, when I read this book and like compared it to Can Slim, that seemed like the biggest difference between O'Neill and Stan Weinstein. I mean, you said you look for relative strength, but it seems like he is kind of, it's not bottom fishing, but it is kind of bottom fishing, while O'Neill likes to buy as close to like all-time highs as possible, while Stan Weinstein is trying to get very early in on the move, pretty much.
Yeah, that's true. But if you look at like the no resistance aspect though, like if a stock clears out its resistance, then it's really just making all-time highs kind of anyway, like because the resistance is gone. So yeah, you can look at it different ways, but you're still buying strength though, which is like, it's a momentum, like trend following strategy, which is similar to Can Slim.
For sure. And we might go in. I see you've got some IPO charts up there, but so we might go into this later. But how do you trade IPOs then? Because there's no kind of longer term stage 1 period for a lot of those before they make a quick move.
Yeah, I mean, they'll have a base, but like the 30-week moving average won't be there because there's not enough price history to create one. So like, I just look for a base and then a breakout out of the base essentially. Like, and typically like you got to have like 4 or 5 weeks at least to set up some type of a base. So that's really what I look for, is just like that first 4 or 5 weeks, like very minimum. And then from there, it could have a breakout, I guess, after that.
For sure. And what's kind of your weekly and daily routine to try to go ahead and find opportunities and kind of build your focus list to basically potentially trade?
Yeah, so I scan for like high volume stocks moving up on volume like every night. I look at their chart patterns, and I'm essentially just pattern matching. I'm looking for stage 2 breakouts or stage 2 continuation breakouts. And I'll scan them on a daily time frame, and then I'll if they look like a stage 2 breakout, I'll then save them to a weekly chart, and then I'll really look at it and see, like, does this look like a stage 2 breakout? If it does, then I save it off to a list, and every week I create a list of stage 2 breakouts that I'm finding. And then like during the week, I start ranking them and trying to find out like what is the best stage 2 breakout of this current week. So I look at like, and that's where I start looking at the factors. Like, is it in a hot sector? Does it have no resistance? How big is the volume? Things like that. And then and that just kind of like transitions then into my trading decisions, whether I'm going to like buy the stock or whether I'm going to pass on it, or how do I manage my portfolio after that. So, but yeah, that's all I do every week is look for stage 2 breakouts and evaluate them. And then if there is no stage 2 breakouts, that kind of tells me a lot of times that the market is not healthy, that I shouldn't expect much out of the market. And that's exactly what we've seen over the last, like 3 months. Like there's been fewer stage 2 breakouts. They've been in lower quality stocks.
Yeah. And
like a lot of them have failed, like almost basically all of them have failed, really, like just week after week. So it's been a tough market because nothing's following through. But it seems like that's kind of changing right now. So hopefully we get into a better market soon here, maybe. I guess
it seems like the last 2 weeks or so, or week and a half, we've kind of turned a little bit of a corner, and we've seen some breakouts fall through, which is big, but it's still a little bit early in this uptrend to tell. And we'll see for sure. Getting into your stock selection a little bit more, what do you deem a high quality stock? Are you looking at fundamentals as well as the chart, or is this just price and volume action based?
It's just price and volume for me. Like I look at, like, if you consider market cap a fundamental, I look at that because that tells me like how a stock's going to move. And I look at like the volume in relation to the float. Like if the volume is so huge that it's like turning the float over, that tells me the stock could be quickly moving into stronger hands. And then once it breaks out, like it might have lesser chance to pull back because they're buying like, and they're going to be holding after that.
Yeah.
I look at short interest too, to see like if there's already like this inbuilt supply demand dynamic where like a lot of people are betting against the stock, but the stock's moving up into stage or having a stage 2 breakout. Like those shorts could be trapped and forced to buy, which really is probably what happened with a lot of the meme stocks this year, where AMC is actually breaking out again right the last couple of weeks. But like these shorts got trapped and the stocks broke out on huge volume. So I look at short position too, but I don't look at earnings. I try to actually detach myself from the stock, because like that's what's really burned me in the past, is like believing in stories and like holding stocks when I shouldn't be. So I try to just focus on the price and volume and focus on all the criteria that Stan Weinstein talks about in the book.
Yeah, it's super interesting because the people who I've interviewed, there's some people on your end of the spectrum where they're trying to almost ignore what the story is, and then there's people on the investing side as well as Jim Ropel, interesting enough, who they really go deep into the fundamentals. They want to know what the stock does, the earnings, the sales, and they won't pick a stock if it doesn't kind of meet their criteria. So yeah, it's very interesting that there's so many different ways to trade, and you just have to find what works for you.
Yeah, exactly. Yeah, there's nothing wrong with different strategies. Like CanSlim's a great strategy. Like there's so many out there, and it's just what works for you. And like this one just worked for me, and I liked it, so that's what I went with.
Yeah, I just kind of pick and choose like little different elements from each guest and make my own strategy. I think that's kind of the best way to do it for me. A strategy isn't going to work if you don't believe in it and trade it and look back and study history and build confidence that actually works and is going to work in the future. So yeah, but I think stage analysis is a great place to start. I've kind of married it with CanSlim and consider both. But yeah, I think stage analysis is super important. I always want to be trading those stage 2s. Going back into your stock selection, would you mind like showing some FinViz screens that maybe you use and talk about kind of how you go through a bunch of charts?
Here's a strong volume gainer scan that I have. So essentially what I'm doing is I'm looking for all stocks increasing on volume that are their prices above $10 a share, which is kind of considered like not a penny stock. So once I don't really want to filter out like a lot of things in the screen, because I want to just see purely like what is moving up on volume. And then from there, all I do is analyze the chart and start to figure out like, is this a stage 2 breakout, or is this just like random price action that doesn't really mean anything? So essentially like today, like there's a whole bunch of stocks like that come up. So that might tell you that there's more action in the market. When the scan results are like low, that might mean that like nothing's going on, and it might mean the market's weaker. So that's an important thing to look at, is how many stocks are actually popping up on your scan, and in relation to what's happened in the recent past. So then all I do is just dump these in a list, and then I start going through them.
Mm-hmm.
So, and then that's as simple as that. And then I just I start looking at them, and then I just kind of evaluate like where is it forming a base, like how much volume is actually coming in, and like what kind of stock is it? Like, is it like a name that like a lot of these stocks are just kind of like random stocks that like, aren't going to be like leading the market or anything. So there's got to be like, it's got to be something that, like the IPOs and the newer merchandise really is what a lot of times powers the market higher too. Yeah. So I'm always looking for recent IPOs. I actually have a scan that is just scanning for recent IPOs over the last like 3 or 4 years, and on the volume on those, because that's like very important to look at those stocks.
Perfect. And how long does it usually take you to go through? I mean, I think 400 stocks on this list, but you probably just go through very quickly because you've kind of trained your eye to pick out what you want.
Yeah, I literally just go through them like kind of like this. Like I just kind of like, if it doesn't catch my eye, like there's nothing going on like on something like this, so I just peel through them, and once something catches my eye, like then I'll dump it into another list. And I'll evaluate it further. So it's kind of like get all the stocks, like look at them once. If you see something, put it in another list, like evaluate it further. And then like at the end of the week, I always go through it once again and see like, let's find like, what is the cream of the crop? Is there really some really good stage 2 breakouts, or did nothing really happen last week? And I just do that week after week after week. And then I track all the stage 2 breakouts in a spreadsheet. So I know like I've got a history of what's happened like week after week after week. And I also track like what they're doing after that. So I've got a spreadsheet that's got all that information in it. And then I just kind of see how the market moves like over time as I'm watching these things.
And what's kind of your average holding period and kind of the batting average for these type of setups?
So I mean, I'm holding for maybe a few weeks to a few months at a time. Like one of the things that I'm really working on is trying to hold as long as I can. I think like
Yeah,
that's a hard thing for any investor is to hold stocks. Like the 30-week moving average helps in that aspect. Um, and then my batting average tends to like change with market conditions. Like if like recently the last 3 months the market hasn't been good, so like any trades that I've taken like that have a higher percentage of failing. Like I think I'm like around 30% or so. And then like in a hot market I might get up to like 60% if
yeah,
things are really working. And like there's just stage two breakout after stage two breakout, and I'm catching those. So it just depends on market conditions, like how my average win rate is going to be.
and what would you say kind of your average loss versus average gain on positions is?
I go for like either a 1% or at the most 2% total portfolio loss on a trade, and a win needs to be like 2x that or higher. So like I'm
Yeah,
not going to consider selling a stock until any part of it really until I'm up like 20% or more. I typically just try to steadily sell into strength until I'm like whittling the position down to about 50% or maybe even down to 25%. And then
mm-hmm.
I'll try to ride the rest for like the rest of the move. And then what that does is that like moves cash back into my account so that I can buy future stage two breakouts if the market provides them. So if I wasn't selling anything, then I wouldn't have any cash to buy anything that was breaking out in the future as the market continues higher.
For sure. And how did you kind of learn to sell or look to take gains like 2x your risk? Was that something you developed because you're completely kind of self-taught? Or is that something you kind of knew from the start going into this, that you want to have larger gains? You want your average gain to be much larger than your average loss?
Well, I mean, if the mathematics don't work out, your portfolio is really not going to make any progress over time. So you have to have these big gains that counteract the small losses to,
Yeah,
compound your account. Like what I've found is like when you get these big gains, like your account tends to like make these big moves up, and then like your goal basically is to protect at that point, like protect the gains. A lot of times you have to get out of what you recently made a lot of money in and either move into something else, or maybe you have to get out of the market completely because there's nothing else that's breaking out. So it's really, yeah, like you make a run, and then you've got to protect and wait for the next opportunity after that.
for sure. And you've mentioned a couple of times like you want the sector to be hot in general, the stocks that you're trading. How do you kind of determine that? Is it just a lot of stocks within that setting up constructively based on your kind of eye that you've developed?
Yeah, so I'm always like tracking like what stocks are in what sectors. So like if I see a few stocks, like I will have to do research into like what sector they belong to. I can't just be totally oblivious to that. So
Yeah,
like if I'm like when I see my breakout list for the week, then I look at what sector they belong to, and if there's like a theme there, that tells me that there's a big movement into that area of the market, and that's really where the outsized gains are. If you look at what happened last year, like you had the stay-at-home theme, you had the
yeah,
clean energy theme. Even into this year, it was like the cryptocurrency theme, like Bitcoin broke out uh, like around October last year, and then the altcoins just made a big run. But it
yeah,
looks like they've topped out now. So, and this happens year after year after year. It's just and like these themes just move the market. So and really like what happens is like once the theme ends, like I think like now like there's almost like a rotation into tech out of like the cryptocurrency. So
right.
like once these transitions happen, that's where you can find the new leaders, and that's where you can like make the big gains because you're getting into the leading stocks as the market's breaking out into a new uptrend or something.
Perfect. Yeah, let's go ahead and look through some charts and yeah, see how you analyze price action.
Sure. Yeah. So here's Tesla from like the stage two breakout in 2019. So Like the stage one base on this thing was just a mile long.
Yeah.
And then you can see here it breaks out on huge volume into a stage two. It kind of consolidated for a while, like after that stage two breakout, but then it made this big run. You notice like the huge increase in volume as like this thing just keeps running. And then like the coronavirus panic hit and busted it back down. But interestingly, like this stock like broke out again like shortly afterwards, and then like obviously like was one of the monsters from 2020. So you can see like a couple more continuation breakouts up here, and then finally it's kind of like in like this consolidation phase now where it's not really doing anything. So yeah, I got involved in this stage two breakout in Tesla, but I kind of sold it a little bit too early. Like I got a little bit, I thought there was like almost a parabolic move going on there back then.
Yeah.
And then I honestly didn't get involved in this stock at all after that, but I traded some other stocks that had some big moves from last year.
And did you buy that first stage two breakout on the earnings day? Because that strong move up on a daily chart, there's a massive gap up. So when did you kind of get involved with Tesla?
Yeah, I bought after the gap up, and a lot of times what I'll do on gap ups is I'll use the gap as actually my stop at that point,
Right.
because it doesn't make sense to use the resistance line because it's too far down. You have to take a smaller position size to really manage your risk there. So if there's a breakaway gap, I'll use the gap. And typically a stock that's this strong will not fill the gap. It'll just keep moving higher. And if it does, that tells you that there's something wrong with the stock.
Yeah. Yeah. Similar to the strongest stocks never revisit the breakout point. The really strong stocks never revisit that earnings gap up below. So I completely agree with you there. And I should have asked you this earlier, but how many positions at a time do you usually have? And what are your kind of thoughts about overall portfolio management, kind of diversification and all that?
I try to have like, I want to have at least five positions, but if there's not five positions to buy, I'm not going to just buy five random positions. So like, if I'm like, that's like the minimum where like the concentration will be too much to where I could damage my portfolio. So like, if it's a hot market, I have at least five stocks. Like the most I want to have typically is around like maybe 10 at the most. I don't like having like too many stocks because that can dilute your performance. And it mostly just depends on how hot the market is. Like I found that like certain periods last year, it was hard not to have a lot of stocks because there were so many stocks moving.
Right.
At other times, like you're just like looking for breakouts. Like is there anything out there to buy? Like, and you might get into one or two and early in the uptrend and just hope that they actually work. So it's really just depends on what's going on with the market. But yeah, I don't want to have more than 10 because that'll dilute performance. And managing I don't really look at diversification across any of these as far as like different sectors or anything. Like I just look at the stage two breakout. Like was it the powerful stage two breakout? And was it like the best stock at that point in time? Like that's what I want to buy. So I don't care if it's all in the same industry or if it's all different industries, really. Like I guess you can really, if there's powerful trends in multiple sectors, you do kind of want to be diversified in case like one starts failing, because then you'll have the other ones that'll keep moving you higher. Right. So that is true, but it just all depends on what the market is doing. Like it's 2020, you had so many things moving at the same time that you could be diversified across sectors and have all these leading stocks. But in other markets, are not going to be like that.
For sure. And just going back to what you said earlier about making progress, then trying to keeping your equity line pretty much flat, and then making progress again to really compound. That's very similar to kind of Mark Minervini's style. I don't know if you've read his books or something, but he really emphasizes that you want to, when the stocks are good, you want to sell into strength, keep that equity line rising, and then when stuff stops working, you want to limit your drawdown as soon as possible, which I completely agree with.
Yeah, I haven't read his newest book on psychology, but I've read all the rest of his books. His books are awesome. Like it's amazing that he's on Twitter and like helping traders out. So yeah, he's one of the legends that I follow. And yeah, like I totally agree. Like that's really like one of the pitfalls of like the early traders. Like anybody can make gains in a bull market, but keeping the gain is what separates the best traders from just the average people. And the best traders like typically after they've seen a few cycles, they understand how this happens and they know that they need to protect because they know what's going to happen next. And that really goes back to like the psychology that we talked about previously in the stage analysis. Like the euphoria at the top of a big bull move will do like psychological damage to your brain where you'll want to like stay in there and like go for more. But in reality, you need to start thinking about protecting and thinking about like scaling out and because once that turns, you're going to maybe be topping out and be in a negative period in the market.
For sure. And going back to kind of books you've read, I didn't ask you that question, but kind of outside of Stan Weinstein's How to Profit and Secrets for Profiting in Bull and Bear Markets, are there any other great kind of stage analysis themed books? And on the other side, kind of what are some books that you really enjoy and you think new traders would find value in reading?
I love all the books related to Jesse Livermore, like Reminiscences and all the like the biographies about him. How to Trade in Stocks that he wrote is awesome too. Minervini's books. There's an author called Brad Kodeshwar that wrote The Perfect Speculator, and he wrote another book that I haven't read, but The Perfect Speculator is a very good complement to stage analysis because it's a very similar like momentum-based breakout system. And he's got a lot of like great quotes in that book as well, as far as like just like trading like quotes that are really good in different aspects of the market. So and that's a book that I don't really hear mentioned much by a lot of people. So those are all my favorites in Minervini's books. And then I like O'Neill's book, obviously, and Darvis, but I like Weinstein's system personally better than those books. But I think those are great books as well.
For sure. And going back to this chart, it's interesting because I kind of got involved. I think I tried trading in here. I made some gains, then got stopped out. There was some volatility, but then I got involved on this kind of bull flag right here. So it's interesting that you kind of draw an earlier entry down here. I mean, there's so many different ways to trade the stock, and pretty much any entry worked just because of the strong uptrend. But I really like the tight price action here, declining volume, and then just boom, pops up and just goes and just does base after base until ultimately, topping up here.
Yeah, and actually, like the volume was pretty good on that move too. So you could probably consider this as well, like a continuation breakout, even though the base here is a little bit small. But
it's pretty short. It
is kind of a VCP style contraction there. So that's good. Another thing that's interesting about like is what the market does to individual stocks. Like the market was bad in September and October of last year, and you can see how Tesla just went sideways. And actually, like it started going sideways right at the end of August, like leading into this bad period. So like you can see how the overall market impacts even some of the best stocks. So that shows up on like, you can look at a lot of stocks from 2020, like this September, October timeframe was hard on almost everything.
For sure. And these are a little bit kind of later stage. How far up a run, how many kind of bases up a run would you kind of consider taking?
Well, again, like I would rather buy the first continuation breakout and be more skeptical of these later ones. Like if they have longer bases, like I might be a little bit more confident because then it's like a longer consolidation that it's breaking out from, but it's still like longer in the uptrend. And it just means that more long-term profit taking is going to come in and that the move is more likely to be over. So I've got less faith. If I see breakouts in earlier stage 2, I would prefer those versus a stock like this that's breaking out in a later base. I guess one aspect of that could be a little different is sometimes you'll get like those parabolic moves at the very end of the move. And so like that could happen in a stock like this that's so universally like watched and loved, but I don't think it really happened here. So I guess that would be like the one difference maybe.
For sure. And just looking here, I mean, I remember looking at the daily chart and Tesla found support. Like this is basically right at the 200-day moving average on a daily chart. So I thought that was super interesting.
Yeah, it was interesting how this all turned out because like, typically after a stock has a run like this, like it's just going to consolidate for a while. So it just like resumed leadership, like right after the coronavirus panic was mostly over. So it kind of threw me for a loop the way that happened. But fortunately, there was so many stocks to buy like after besides Tesla. So like I can show you like one of the stocks that I did really well on coming out of the coronavirus panic was Draftkings. So like this stock, like it SPAC IPO'd like in late 2019, and it was like I was watching this and it was so hard to get into. Like when it first made this move, it was just showing so much power and strength and like no pullback whatsoever. Then the coronavirus panic starts happening and it moves down. But it just like stayed above the 30-week moving average for like 4 or 5 weeks, like while like the S&P 500 continued to go down, like so it's showing like just unbelievable relative strength here. And then like as soon as the tide finally turned, like it only took like 4 or 5 weeks, but then it, it just erupted, like, and it just went straight up for like a couple months after that. So I actually caught this move, and then I caught this continuation breakout here, which this was great for me because like this September, again, like this time frame was so poor that like nothing was working. So like I actually had an up September because I was in this stock and I was in like Workhorse Group, and that's all I was in. Like I was like everything else wasn't working, so I was like out, and so that was great for me, I guess. But like so this is like a example of, and a lot of these stocks were coming off that early stage 2 breakout because of what happened with the panic. And like, there was like some really great IPOs that came out like around this time too, like Livongo and like Fiverr, and like there's just
Zoom.
Just quite a few that made these runs. So, this was like one stock. Another one from last year was, that I traded later in the year was TIGR. And this was like an example of like a stock that's like breaking out and failing like multiple times. Like, so like, obviously like these stage 2 breakouts don't always work, right? So like you have to like manage your risk and like take your loss, like once it moves back below the breakout area. And this stock, like I tried it twice and it failed. And then like right at the end of the year, like it just continued this base and like ripped higher on huge volume. And like Futu was like the other stock, like they're kind of like sister stocks for some reason, but like they broke out at the same time, and the volume was massive. And so this one went up. I actually like around this January timeframe, I was starting to get a little bit nervous because everything was going so crazy. So I actually sold this one too early, and kind of like upset because it kept making this move. But this was another like great breakout towards the end of 2020.
And it only has to work once to pay for all those bad, not bad, but stop loss hits. I mean, it only has to, it can easily pay for itself with one strong breakout. So
exactly.
This was a powerful move.
Yeah, these trending moves are what moves your account up. So if you get a couple of these in your portfolio and you hold them, then they can move your account. And you just like, you take the nicks and the ones that don't work. And unfortunately, recently, like many have not worked. So you just been taking hits, and it really kind of tells you just to get out and wait for better conditions. And that's kind of what separates like people with experience from people that are over trading the market.
For sure. And how do you determine these kind of pivot points that you've drawn on here?
I just look for like some type of horizontal consolidation and resistance. So I don't really like, I guess I'm not like super concerned with like specific pivots or like, like I'll go down into the base. Like I said, if there's volume down there, and try to like consider that a stage 2 breakout. But like, I don't really, I want to be in the best stocks, and I don't want to like have like little minutia in the technicals, like dissuade me from like finding the best stuff. So like, I try to like keep it just really simple and like, just look at like consolidations and resistance and then breakouts. So if it looks a little bit weird, like I'll just try to like make it look good enough to where it's tradable for me. Like I think like Upstart is kind of a weird chart. I can maybe show that next if you want. Like
go for it.
So like this one like is just bizarre because it like kind of made this move like out of the IPO, and then it came back, and then all of a sudden like it explodes. Boom. Like I'm like I think they forecasted earnings or something, and it just like the volume was just ferocious, right? And like this told me that there was a lot of power in this one, and it put it on my radar. But this move is so big that I like there's no way to manage risk like out of this move really. So like then like I'm watching it, and then it kind of comes back down into like this consolidation again, and then it just rips higher once again. Like this move is more manageable, so it allowed me to get into. But like, this is kind of a bizarre like wedging up like this, and then it just shows like the market weakness was like wreaking havoc with this stock. Like it kind of like wanted to be a leader like in March, but like nothing was going to lead in March because the market was weak. So, and this is like a technology stock, so it's in like the exact wrong sector. So it just kind of like explodes, and then it just has no power after that. So like it's not really a clean pattern, but the volume is just so impressive here that it just like you have to be watching this stock. And like the fact that it's like done 3 consecutive weeks now of big volume versus like what it was doing before that is like a big sign to me that something's going on here as far as like institutional accumulation and stuff.
And on this breakout on the weekly, it doesn't look super extended, but on the daily, it had already been up like 5 days in a row from this kind of intermediate bottom. Do you take that into account at all, or are you really just trading off the weekly? If it goes through that level, that's when you buy?
Well, it all depends on like where I'm going to really set my stop. And like, if it gaps up that much, like I've got to buy like a smaller initial position because I have to manage risk somehow. So I'm not going to be able to get into it as much if it's already extended. And then you're just waiting for a pullback really to buy into if you get one across the next like couple of weeks. So my rule is I give myself 3 weeks to establish a position in a position trade. So I try to get part of it on the initial breakout, and then I just look to buy the pullback after that. So I just try to be patient and try to get a pullback. Like sometimes I'll just use limit orders and just like set them at levels that make sense, and then see if I get an entry there. Sometimes I do, sometimes I don't. So sometimes if a breakout leaves, I might not have the position that I want to have, but at that point, I don't want to mess up my cost basis. So I don't get involved after it leaves the breakout. I got to establish the position where I just got to leave it alone at that point.
For sure. And I meant to ask this of you earlier. Are you doing this full time, or are you doing engineering full time? And this is kind of a side thing.
I'm still a part-time trader. So I'm still working full time as a software engineer, but I do kind of want to maybe get into full-time trading at some point. So I still have that kind of in the back of my mind, but I still do. I do all my research at night, and I watch the market kind of sporadically during the day because I'm working. So I can't obviously be watching price action all the time, but I can still set limit orders. I can still kind of like do a quick scan and see like, what are the volume leaders? Like, I still like post on Twitter here and there and stuff. So like, I'm still like there. I'm just not like full-time trading, I guess.
And do you have any advice for people who can't do this full time or have a full time job outside of this, and like how they can maximize their potential? Because it's tough if you can't watch the breakout and see what the volume looks like. I mean, do you set buy stops through that pivot, and no matter what you take it, or do you kind of have alerts so when something is moving through it, you can go ahead and look at the chart and take a look?
Yeah. So when I get this piece like out of the breakout, like sometimes if I don't catch the pivot, like I have to just like get a smaller position and like try to buy the pullback. So that's kind of how I manage the risk there. But yeah, like if you're working a job, like, and if you're like, you could set buy points like Stan Weinstein recommended to buy out of these pivots, or if you do your nightly work and you see a breakout, like try to buy the pullback, like set some limit orders the next day, leave them in the market and see what happens. Like maybe stocks are a lot more volatile during the day than, like you can look at the ATR on a stock and see like how volatile it really is. And like, you can catch pullbacks a lot of times that'll be like meaningful enough to where you can establish some risk there. And so that's what I'd recommend for people that are working. And, you can do, hopefully you have some time at night to do your research and just stay on top of what's going on so that you can place those orders and still actively trade, but just not be in front of it all day.
For sure. All right. What other stocks do you have to go over?
So like the other one like that's recently moving is Roblox. Like it came out of this IPO consolidation, just like Upstart. Like it had like these 3 consecutive weeks now of big volume, and
right.
This is like this chart just looks like more pleasing to the eye to me than Upstart because of like the clearly like the resistance and like the consolidation there and stuff. So like you can clearly see it break out, and you can manage risk on this one easier on the breakout because it barely like kind of popped out. So like it makes it easier to trade. Plus like this one's a larger market cap stock. So it's probably going to be moving slower than Upstart. So that's like one of the benefits here as far as like how fast it's going. But this one is probably, it looks like it might be a leader if we're making a new cycle here.
Yeah.
The one thing, if you look at like the daily chart on both of these stocks, so this is something that I was looking at, like where like the market seemed to like change around May 11th, and you can notice like how the volume just like on a daily basis like picked up both in Roblox and in Upstart, and coincidentally like that coincided with like the big like move lower in Bitcoin actually, and like a lot of the cryptocurrencies. So like to me it's like the leadership like finally maybe is changing, because like crypto was the leader up until the last few weeks, and it's just ironically like how this stuff is like flowing together. So that's kind of like my theory right now is like is maybe new leadership, and like again like look at Upstart here, like notice like the increase in volume, like it kind of made like this, like it after earnings it like moved up higher, and then it had like this weird kind of move lower on volume again, but then the volume just kept coming in and pushed it back up. So just noticing change of character, and like the pullback here was on a little bit lower volume, so like it's just seeming like there's less like resistance, like there's just like was heavy resistance in all these stocks like for a couple months because nothing was behind it. There was no institutional buying pressure.
Could you talk about how you're managing risk on this one? Like where did you put your first stop loss? When did you move it up? And yeah, can you talk about that?
Well, so it's barely just kind of broke out of like the resistance here, but I was buying like on the breakout, like at some point, I guess this was last week. And then I bought a little, would that be this week on the pullback? So like I've already like pretty much got a position in this one now, and basically managing risk. Like I'd have to look at, I always base it off my position size to like what my maximum risk is. So I don't really care, even if I have to move like if I have to move the stop technically up to match my risk, I'll do that, because I don't care about technical levels when it comes to my stop. So my stop's always going to be 1 or 2% at the most. And that depends too on like how many stocks I have in my portfolio. Like I'm only like, I think 40% invested right now. Like because we're coming out of like this negative period, and I've been like keeping high cash because nothing's been working. And so that also impacts like if I'm going to allow like a little bit larger, like a maybe closer to 2% of a max risk, but because I don't have as many positions, and I'm not going to run those stops if everything goes against me, I guess. But yeah, so that's all I do to manage risk. And like once I don't buy on the way up. I just want to establish a position and then like let it run, because and then I'll just once I get into this point where it's up 20% or more, I'll sell them into strength, and then I'm riding the rest and just to see where it goes. And like that a lot, like that stuff that you're riding hopefully is what makes the big moves in your account and allows you to compound over time.
And when are you moving your stop up, or do you do that, or just at 20%? You've got that same original stop all the way up to 20%?
Well, I'm going to use the trailing 30 week for like the portion I'm going to sell into weakness, but like the portion I'm selling into strength, I'm just peeling off as it's going up. So it doesn't matter. Gotcha. Like once you get to the 20% level, and I try to just sell small pieces. Like I'm just like selling pieces here and there and like putting cash back into my account, like, as it's moving up, and like hopefully I can move that into future stage 2 breakouts, because if we are moving into something like a healthier market, like we're going to see like probably like more stocks breaking out after this. Yeah. So it just depends, like, and then you're kind of like weighing like how long is it really going to go, because we aren't really coming off a big correction right now. So I'm a little skeptical, and it's like a weird time of year with summer, like that this could like maybe move into something substantial. So that kind of weighs into like your, like how many positions you really want to have and how aggressive you want to be versus other times that might look a little bit better.
For sure. And are you looking at any other timeframes outside of weekly and daily charts, or those are the main two?
I don't really look at intraday charts. Like I have one setting on my stock charts that I can look at intraday, but I don't really find any value in that, I guess. Like since I'm a position trader, like I don't, that time frame doesn't really do anything for me. Like I mean, it's really just going to confuse me with the volatility and like so yeah, I just look at daily and weekly pretty much. And honestly, the more I look at weekly, I think the better off I am. Like the daily can have so much volatility that it messes with your head sometimes. So
Yeah, I've been trying to transition more and more over to the weekly, especially once I've got a little bit of cushion going on. It keeps things a little bit more clean and simple. And yeah, you don't get scared out from one bad day where it just recovers end of week. So yeah, for sure. I completely agree. Yeah, do you want to keep going through some charts?
yeah, so Celsius from last year. So this is like an example of like this. We had this bad market in October or September and October. Like I think the S&P 500 was down 10% during both months. Then the election happened, and like you had like Celsius, like Farfetch, Grow Generation. Like there was like 4 or 5 or 6 like new leaders that broke out like the first week of the rally. Like once the market, like once that correction ended. So like, and notice how like this is going sideways in like a tight consolidation, like right before, I think this might have been earnings, but like right after this breaks out, like it's just showing like the sellers aren't coming in and like moving it lower while the market's that weak. So like this basing action like caught my eye, and then like obviously you see the explosion in volume and so I was happy with this one. I actually bought this one and like was happy because I held it like all the way into January, and then like again like January, like just with the GameStop madness, like I got a little bit defensive and just like started selling stuff, even though like I knew that like it wasn't even back to like the 30-week yet, but like it just seemed like there was so much like euphoria that something bad was going to happen. So like so that ended up working out for in this case because it's just consolidated since then, but it's kind of like setting up again. Yeah, like it might, maybe if it gets like a little bit tighter here, like maybe it's going to set up for another continuation breakout. So I guess it is a little bit later in the move now, but this is a fairly big base, like almost 6 months now. So probably one to put on your watch list, honestly, like at this point.
So it's interesting you wouldn't draw something here as a stage 2 continuation that doesn't meet the criteria.
Well, no, the volume's not there. Like this
Gotcha.
Current week, like it's got to be like you want to see like the 2-time average volume explosion, and then like I really get excited, or like when there's like follow-on volume, like when you see like a cluster of volume afterwards, like it's like the institutions are like piling in there. So and we're seeing that in Upstart and Roblox. So that's like another reason why those ones look good. But yeah, like the volume here is just not that great yet. So you can't consider that a breakout yet. But it's one for the watch list because it's like right at that resistance line, and who knows what's going to happen in the next couple of weeks.
Yeah, for sure. And it's interesting. All these examples you're bringing up, there are a lot of the Can Slim traders were trading those exact same names. So it's interesting how all the systems come together. And I think I bought a pullback here this week and got a nice piece of this as well. So yeah, fond memories.
Yeah, you're still buying early in the stage 2 continuation breakout too. Like you're on week 3 here. So much better, obviously, than waiting until you already moved a lot higher to buy.
For sure.
So, but yeah, like with stage analysis, like one of the things that you can use it on any asset. Like you can use it on commodities or even Bitcoin or anything else. So like this is another trade that I caught last year where like you've got this big kind of base, but it's kind of ugly with this like coronavirus panic, but it tightened up here and then it popped above resistance, and you can manage risk really well here because like the volume's exploding, but it's not totally busted out of the base yet. So, and this like base in silver like goes back like years and years and years. So like I was actually really shocked that this didn't continue higher here. Like it's almost like the commodities like just ran into a wall, and you can look at the volume here. Like it just comes in and just blasts it down, and then like it just went to sleep after that. So kind of a short-lived trade, but these are the kind of sell signals on the weekly that I look for. Like if it's going to sell off on huge volume like this is probably a sign that something's wrong. And, like I'll take that as a sell signal and just move on to something else. It doesn't always work. Sometimes they're false signals, but a lot of times they aren't. So, but yeah, you can use this on anything that has price and volume really. You can use it on indexes too. Like I think I had a chart, the S&P 500, and like here's an example of a stage 4 downtrend. So like,
Right.
if I would have been a guru on stage analysis back then, like, I mean, look at the stage 3 top is forming, and then it breaks down below the downtrending 30-week moving average, and then comes back up, retests like one more time, and then it's just like, here's where the collapse happened.
Yeah.
So you had plenty of time to get out here, and you can tell it's already in a downtrend here. So actually, like, you could have shorted some of these moves and probably done well as well. So, yeah, so it works on anything. It's what makes the systems like elegant and effective is a good way to describe it, I think.
For sure. And there's kind of an inverse stage 2A breakout there, or breakdown really. And then it just collapses from there.
Yeah, he talks about in the book how to short these things too. Like you really like wait for the rally back up to like the resistance, like the 30-week, and then you can use that as a buy point to short these moves lower. So, yeah, so it's really it can help you with even like the part-time trader that just wants to like understand trends in the market. I think the system is really beneficial. It's probably why your professor recommended it and used it, because it can give it can level up your game in the markets like dramatically just by like knowing these simple rules around these stages.
Yeah, it's amazing just how many people are trading without a overall system, and I think stage analysis is a great simple way, as you said, to really have a process and define risk and all of those things.
Exactly. Yeah. It's that's one of the pitfalls of being a beginning trader, is like trying to figure out what you're going to do and how you're going to handle the markets. And like, unfortunately, like you have systems that are built into these books, like CanSlim, Stage Analysis, Darvas box theory. Like you can just take those and use those if you want.
Yeah.
Or you can like take the ideas and like develop your own system off of them. Like there's different ways you can go about it, but like there's like books out there, Minervini's books, the VCP stuff, like you can use that. So it's like great information that you can build a foundation off of.
Sure. And could you bring up AMC real quick? Because you talked about that a little bit. A lot of people seem to be that's their system. They go to Reddit and try to buy some squeezes.
This one, like the initial like breakout here obviously was just like the pump move that like you can't buy this because it's already like blown like way high, too high, and there's nowhere to manage risk. But like I actually did in my research, I saw this breakout and I was like, man, should I buy AMC? Like I'm, like you look at the symbol, like you have a bias against it. You're like, I'm not going to buy AMC Entertainment. Like this is junk, right? But like, look at this continuation move it's made this week is just unbelievable. So, and the volume was there too. Like the volume's 2 times average volume on the breakout of this consolidation. So, and it gave you a pullback to buy into and manage risk the next week. So the setup was there. I didn't take it. So I'm looking at it this week, like that's unbelievable, but you can't just go chasing into this now because
it's too late. I mean, it's too extended.
It could be topping now, like who knows, or it could go up another 100%. Like, you just like, it's impossible to know. And it's not really like you can't, like the amateur gets jealous of these moves and buys in without managing risk, and bad things can happen to them then. So it's just all about managing your risk and taking the entries that make sense risk wise. And then that's why like this system, like that's why people have trouble in the markets, because they want to buy sure things. But the way you make money on trends is you buy early when you don't really know what's going to happen, but the conditions are there that it could have a move. You just don't really know what exactly is going to happen. So it's like you're planting a tree, it's going to grow maybe, but you don't know exactly how high or whatever. You're just like going to see what happens. And it's hard for people to understand that, but that's really how you approach the markets when you're doing this type of trading.
For sure. It's all about finding those high potential, high probability setups and just turning over that edge as many times as possible. And eventually the math will work itself out.
Yeah, like the edge is like all the conditions, like again in the ideal buy point, like the no resistance, big
Yeah.
volume, hot sector. I mean, like meme or like heavily shorted is kind of a. I mean, it turned itself into a sector, like it
Yeah.
because like GameStop, like there was like 5 or 6 stocks that were the same, like heavily shorted was their like sector, I guess. So you can kind of group them together, I guess, in that aspect. But yeah, it's the market is, it doesn't make sense, but this is what happens, and it makes it entertaining at the same time as interesting, I guess. Like when you see these kind of moves in these stocks. Yeah, so this is an example like FNV here of like a different time frame. Like in 2016,
Yeah.
a lot of the gold and silver miners broke out into stage 2 earlier in the year and made like big moves. So you can see like the big volume increase here and the breakout from the stage 1 base. So it's an example of another sector like breaking out and like these stocks, like it was like they were all in a big group. So like this is showing you group confirmation. Like a lot of these cyclical stocks tend to have like kind of more groups than sometimes the IPOs, and like the newer tech stocks might be like more like in their own class because you can't really group them as much. But this is a case of like a group breaking out into stage 2.
Makes sense. And look at that volume coming in on the breakout. That's huge.
Yeah, it's just like these explosions like are so noticeable. Like, I mean, it's doing like 3 times or more average weekly volume here and hasn't done that much volume in like the last year or so. So it's just a noticeable difference in what's going on with the stock.
Makes sense. And I might have asked this earlier, but are you waiting until the end of the week to buy, or as soon as it moves through that point, you're putting on a position? And also, how far extended from that buy point will you continue to kind of build your position up?
So it's like I'm trying to buy like as soon as I can tell that it's like a high volume breakout above resistance, I'm trying to get a piece of it, and then like it depends on how far it is above like the resistance level and like where I can establish like where I'm managing my risk both from like the account perspective and like I mean I try to match it up initially to the technical level.
Yeah.
But if I need to like adjust it to get a position size, like I will a little bit. I don't want to move it too far off because it has to make certain sense to like manage risk against. But yeah, then you're just like again, like I don't buy the entire position at once. Like I'm trying to buy like a piece of it on the breakout and then wait for the pullback to get the rest of it. So that's what I do, and it all works differently on these breakouts. Like sometimes it'll wait a couple weeks to pull back, or it'll pull back for like pins. I think in 2020 took like
Yeah. Do you want to bring it up?
yeah like
Yeah, that frustrated a lot of people. I know, just was going sideways, breaking out, and
yeah, like this one busted out on huge volume, and then it took like let's see 3, 6, 7, like 7 or 8 weeks before it just continued higher. So
yeah,
yeah, it's very frustrating. Like, and you had like back to back weeks of big volume on the breakout too,
right.
and then it just stalled. But I guess like look at the time frame though. Again, like the September, October. I guess it started moving in September though, that's showing like huge RS there, like
Right.
and consolidating in October as well. So that's like, I mean, this is like leader written all over it. Like I know, like I think I caught this breakout, but then I got bored and just like sold it or something. Like like it just like never started moving. But that was a bad move because
Just took off. Yeah.
yeah, like I know people did really well on FinTwit on this thing. So um yeah, that's like the market cap can impact this inability to move too sometimes. Like the bigger the stock, like the more it takes to like push it higher and stuff. So
Right.
like this one is like I don't know, like a 30-40 billion, I think, or maybe more. So maybe it just needed more like buying pressure behind it to push it higher.
Do you focus on smaller caps in general?
Uh no, I mean I don't want to have like I will trade smaller caps, but I only like want to do like one or two at the most because they're more risky and they make more volatile moves that
Yeah.
can like stop you out and stuff. So like it's kind of like they kind of entice you because they can make these moves, but at the same time they're harder to manage risk and they're more dangerous. So like yeah, I'm only going to trade like one or two at the very most, but I'd rather have stocks like these or just a mix, like,
Yeah.
and again, it all depends on what's happening in the market. Like you're just taking the breakouts that present themselves. So you're not
Yeah.
like, you're letting the market tell you like what's going on.
Right.
So
For sure. And just looking at this chart, look how wide and loose it got the last during this last base. This is pretty wild action.
yeah, I mean, this looks almost like a continuation breakout here, but the volume's a little bit weak. And then yeah, the heavy market just wreaks havoc on this. Like it sells off on heavy volume, and then erratic moves, like no volume on this move,
Yeah.
and then big selling volume here. Now it's below the 30-week moving average. So now it's like this is a stock you just do not want to mess with now. Like it's erratic behavior, like below like a declining 30-week a little bit here. Like, I mean, my guess is it probably doesn't go into stage 4, but maybe it needs to consolidate for like months and months and months after this, and like just offers like nothing to do. So yeah, like this is like Fastly turned into a disaster of a stock. Like after, like I got caught in this after hours like breakdown and lost money on Fastly on this trade. I actually did catch it here and made money on it there, but like, like after hours, earnings come out and it smashes through like resistance here, and I just dumped it after hours, and like, it sells off more, and then it just like springs back up. Like, why did it do this? I don't know, but it like now it's really erratic, and like there's no volume on this move, and then there's no really base here, and then like, and it's just a mess. Like, and so it's like it turns into like it had this great tight action here, and then great move, and then now it's a disaster. Like it's or besides this move, so it's like it's why you don't want to marry a stock. Like you love Fastly for some reason, and it treats you well here, but then it becomes a disaster and it takes all your profits away too. So, that's why I like the technical system, is because you're just like divorced from the stocks and you're just trying to see what the institution's like at the time.
Yeah, I completely agree. I also got caught in that huge gap down. I think it was like revenue report, or they lost TikTok that day. But anyway, it gapped down huge, and I think I just sold at the open pretty much. So yeah, that was a fun day, unfortunately.
Yeah, it was very. It was such a great move off of here, and like this is
a huge move. Yeah,
this is kind of like a little bit sloppy, but maybe the recency bias, like this base isn't quite as good as it could have been to break out from. But I think a lot of people were really happy with it, hyped up in the stock. I don't know, but yeah, it just fell apart. So I mean, that just happens. Like it's just the stock market. It just this is why it doesn't make sense to people, but we're just following supply and demand, and the institutions don't like it anymore now. So they are waiting for maybe it to improve fundamentally somehow, but I don't know. So like, we'll see what happens. I mean, but I'm not going to touch it for, while it's doing this kind of stuff.
Yeah, for sure. It needs time. Do you want to wrap it up with one last chart, maybe Fetch from last year?
Yeah. So Fetch, like it, again, like the RS during the September, October stuff was pretty good here, like a little bit of weakness in September, but again, like tight action here, like this thing rips higher. So this is harder to manage risk off of. I definitely took a smaller position on this one when I bought it. But like, I mean, yeah, like that's a pretty big move, like above the breakout level, I guess. But like this is a huge IPO base though. Like if you look at like, I think if I go back like 3 years, like this thing, like look at this, like, overall base is really big. So this is kind of enticing, like seeing like this structure like this and seeing like the accumulation, like as it's like making the end of the base and then like the handle here, like that's like a really good pattern.
Right.
So that broke out and had a nice move, and then like kind of consolidated, but again, like these leaders have just gotten really erratic, and like new leadership's taking over right now, I think. So like, you have to just wait for these stocks to form some kind of base that is like tighter and that makes sense, and then like breaks out again. Otherwise there's no trade here at all. So, and these are the cycles that happen in the stock market over and over. Like, a stock has a big move. Like the goal is just to capture it and move on, and then trade something else. Or if there's nothing else there, then you got to like protect and just wait for better opportunities.
For sure. Is Path on your radar at all? Because that's kind of one of the other stocks I'm watching as a potential leader.
Yep. Like this is let's go to the weekly. Like this is like similar to Roblox, like this, 5 or 6 week kind of base. Like it doesn't really have like the volume, like the volume kind of occurred here, but like not on the breakout of this like kind of 5 or 6 week base here. So that's not as great, but like I mean, you got like Roblox, Upstart, like there's not a lot to choose from still right now. Like, so it's like, we're looking for stuff right now. Like we're not getting like fed by the market, like the opportunities. We're just kind of like fishing, like seeing if tech's going to move here. Like I was trying to play Cleveland Cliffs like for the last few weeks, and it's just been a disaster of volatility and like not working out well. So like it's been because of the heavy market probably, even though like it's in like the steel sector, and you've seen like Nucor has been like a one that's been like working really well, but like I didn't trade this one unfortunately, but like this one has like that DCP style consolidation like that it broke out from again, and was like the steel sector has been one of the leading sectors, but like now you've got like this heavy volume coming in, like maybe it's it's still a little tight, but I mean maybe they're distributing and like taking the move here, and like so it's already made a move. So yeah, it's just been tough. Like the last 3 months have been like low opportunities, and the growth stocks really had a hard time. So
for sure, I've been trying to do just a lot of waiting and a lot of cash in my portfolio the past 3 months. I think that's been the better way to play it, at least for my style.
Yeah, I guess like if you're a newer trader, like you saw 2020, you saw how explosive it was after the panic. You saw how much money was made. It probably like filled your brain with like, I want to make moves all the time and like keep trading. And like now this period hits. I mean, even like I still traded a little bit too much, like in February and March, and like
same,
and lost some money, and like it's just like the market infects your brain with like the wrong signals. Like it tells you to like be aggressive for a long time, and then like you have to like know that at some point it's going to stop, and it ended up doing that in January and February. So it did try to rotate into like cyclicals and like uranium, steel, these other things, but like a lot of the moves have been erratic and just like not very tradable, and so it's been tough even on those. And then you had like really the biggest moves were the altcoins, like the Bitcoin stuff, like the crazy like Dogecoin stuff, like that. Those had like great moves that came out of patterns actually, but I don't trade any crypto really. So, but now it looks like they had made a major top with the volume coming in and like the distribution, and like now it's below the 30-week moving average. So like, isn't it in a longer term stage 3 now? Like the psychology to me, like seems like it's there to make the stage 3 top, because like you see this behavior, like the diamond hands and like the people are just acting crazy like about Bitcoin. So you see, this is what you see over and over with bubbles. You see like the housing bubble like made people act differently. The tech bubble made people like quit their jobs and trade tech stocks. Like you see behavior change at the end of these huge moves in the market.
Yeah, and we'll see what happens. Yeah, certainly right now the charts don't look great for Bitcoin, Ethereum. I think Ethereum looks a little bit better than Bitcoin, but still a lot of those are, don't look too great.
Yeah, like it's still technically above the 30-week moving average, but has this big selling now, and like this, I would guess there'd be a lot of consolidation like after this, and then we'll see what happens. And then you got Bitcoin that's like actually below the 30-week moving average.
Yeah.
And so a lot of volume, and I think like $500 billion came out of it or something like
crazy.
That's crazy,
And it's just tough to trade those. I mean, I think that one day there was like a 30% gap down and people couldn't get into their Coinbase accounts. For me, there's kind of extra risk with crypto that I haven't touched that much. I mean, there's certainly money to be made especially earlier on in the move. But now, yeah, it's a little bit,
I remember like
work.
people on Twitter, some of the traders that I know, like pointing out the stage 2 breakout here. Like I think I even tweeted some stuff about it. Nobody was talking about diamond hands down here. Like nobody,
Exactly. Yeah.
you know, like Bitcoin was off everyone's radar, and like people were still disgusted with Bitcoin because it went nowhere for like years.
Yeah.
Diamond hands was only been like the last couple months.
Right.
And look what it's doing. This looks like a top.
Yeah. Yeah, we'll see. People are still saying it's going to 500K. So, well, it might take a while to get there if it does, for sure.
Yeah, I don't know.
Yeah. All right. That's great covering the charts. Are there any other kind of stage analysis concepts that you think would be important to cover? I see you got like a forest through the trees.
Yeah, like this is really like one of the most important pages in the book if you want to go over this.
Sure, go for it.
So what I consider to be one of the most important points in Stan Weinstein's book is the forest to the trees approach. Like this page, it just really details the overall strategy. Like he says that you start with the trend of the market, and then you work your way into the best sectors, and then you work your way into the best looking stocks. And one of the key things that he says on this page that really resonates with me on the bottom is he says, if you follow this 3-step process, you'll find yourself heavily invested in the best acting stocks when the market is powering ahead and sitting on large cash reserves when the overall trend turns bearish. So it's telling you there, like you want to be involved in the market where you're seeing things breaking out, when you're seeing like the market is actually moving higher, and when you're seeing like sectors like start to take leadership. And like when you don't see that stuff, when you see the market struggling, when you see like no leadership, when you see no stage 2 breakouts, then that's when you pull back, raise cash, get defensive, wait for better opportunities. So like he spells it out all on this page. And like so I think like besides the stage analysis system and like the rules to like navigate yourself across the market, like this is like extremely important, because again, like one of the pitfalls of being a new trader is like you're always in the market all the time, and like
right,
you're gonna do well in bull markets, but like the market's going to take it away from you in the bearish period. So you have to learn how to step away and protect when things aren't working well. And it took me a long time to finally figure that out, but and I'm still getting better at it, because it's something that you're just going to have to adapt to and work through your entire career as a trader, I think. But it's a really important material here, and I think like it's important to highlight if you're reading this book.
For sure. And for everybody who hasn't seen it yet and checked out the book, go ahead and do it. It's a really great one, definitely a classic. Basically all the traders who I've interviewed, it's one of their favorites, and one that you can definitely learn from for sure. All right. Thanks so much, Justin, for sharing your expertise and going through those charts and really explaining stage analysis. I always like to end it kind of with one last question, kind of asking what kind of advice you have for new traders who are just starting out, and maybe they had some success in 2020, but now they're experiencing kind of a choppier, harder environment. So kind of what advice would you have for people to kind of shorten their learning curves overall?
I would say like try to find a method that you can apply to the markets on a consistent basis, and then get the discipline to actually follow the method, and then see if it works or not. Like test it. And if it's not working, then you got to adjust it and really find what works for you. And if you're totally lost, like start with one of these books. Start with Stan Weinstein's book. Start with William O'Neill's book. Start with Darvis. Like start with something that has a system built into it. Try that. See if you like it. Like, and if you like it, use it. If you don't, like maybe adapt it or maybe take parts of it. Like, but find something that works for you, and then get the discipline to actually follow the steps so that you can test whether it works or not. Because a lot of times I think what happens is they get into the markets and they just don't really have a system. So like whatever's happening in the market just happens to them and affects them. So I think like you got to find a systematic approach that you can just be consistent with.
100%. I completely agree. I think that's great advice. Well, thanks so much again, Justin, for coming on and sharing your expertise. For everybody watching, thanks for tuning in. If you enjoyed, go ahead and like down below and subscribe if you are new to the channel. And Justin, I'll have the links to your Twitter as well as your website down below. The next big trade. Is that the best place for people to reach out to you if they have any questions?
Yeah, nextbigtrade.com is my website. And I'm also on Twitter at nextbigtrade, and I also have a YouTube channel that I haven't posted to in a while, but you can find it all on my Twitter page. Links to those things as well. So that's a great place to find me.
Perfect. And maybe I'll convince you to start that back up. I think that'd be really cool.
Yeah, I should take some. I mean, you're doing such a great job that I need to learn from you on how to do this better. So I think like maybe I'll try to do that.
Yeah, for sure. Well, anyway, thanks again for coming on, Justin, and thanks for tuning in, everybody. And we'll see you guys in future videos.